There's some people that missed the boat. Silver was 1650, not only 6 months ago. And that was 1650 was exactly what it was about 10 years ago. So that was once in a lifetime opportunity to buy. But now it's even better. I think that because technically gold is also breaking out.
Hey everybody, Smart Silver Stacker here. Thanks for tuning into part 2 of my interview with John Lee, CEO and Chairman of Elephant Mining Corp. If you haven't seen part 1 yet, you can check that out with the link down in the description, and you'll definitely want to stick around for part 2. We'll be covering everything from the possibility of a major cyber attack to the dollar's loss of global hegemony and the BRICS nations, and we'll be getting John's forecast for the price of gold and silver moving forward. So stick around, we're going to pick up right where we left off.
What I believe will happen, I think something along the line of a major cyber attack or some galactical event that would shut the power supply down for an extended period of time.
That's kind of an ominous forecast of the grid going down, but there is some evidence to substantiate that. I think it was at the World Economic Forum last year, or earlier this year, rather, they published a cybersecurity report where they polled business leaders and cybersecurity experts, and I don't remember the exact number, but I think it was something like 80% of them believed that a major cyber attack was possible within the next 2 years or a couple of years.
Yep. And they experiment that in Pakistan, in California, they're experimenting that already. It's kind of interesting. Same with the health mandate, some people, some very famous people that invented computers and software were talking about, you shouldn't be worried about the nuclear war. You should be worried about some sort of virus. So lo and behold.
Yeah, well, as we have this very complex, technologically dependent society today. So, the more complicated and complex your society gets, you get nice things like smartphones, but you also have a lot more vulnerability. If you took the grid down 100 years ago, probably wouldn't have much impact on people's daily life. But yeah, today I just worry about, all the people who are addicted to scrolling through social media and TikTok and all that stuff. I mean, they're going to lose their minds if the power grid goes down for any extended period of time.
You're not going to be able to save money with the digital currency. The central bank digital currency has to roll out hand in hand with the potential blackout. That is all done on purpose so that you'll be totally immobilized, handicapped.
Yeah, problem, reaction, solution.
You know what? I think the key here is watch the movie and guard the exit closely. So you have your plan B well planned out.
Absolutely. And I think that demonstrates why, there's a little bit more to preparedness just than precious metals too. That's certainly the focus here on this channel, but, think about all eventualities, food, self-defense, all these things, very important considerations for us as we enter into this kind of strange era that we seem to be piloting now, this era of 5th generational warfare. There's certainly plenty of conflict going on in the world that could lead to a major cyber attack or something along those lines. And we are really vulnerable to that. And that's the nice thing about, the global financial system. If the power grid goes down, going to be tremendous problems. And precious metals certainly are nice. Precious metals were money for thousands of years before we had a power grid. So they're going to continue to, be assets with value. No doubt about that. I want to shift gears here a little bit. We've kind of gone down a rabbit hole here, which is I like doing. I'm sure the audience appreciates that as well. But I want to get your take on platinum and the platinum group metals. I know you've had some experience in that space, and we have seen a squeeze in some of the platinum group metals. We had a big spike up in rhodium a couple of years ago from under $1,000 to around 30,000. We saw last year, following the Russian invasion of Ukraine, a big spike up in the price of palladium. They control a lot of the palladium production in the world. And something that really stands out to me is that if you look at global platinum production, the BRICS nations, specifically South Africa and Russia, and really South Africa has a huge portion of the world's production, but they control something like 80% of global platinum production. And I know a lot of people say, well, you won't need platinum because it's only for catalytic converters, and EVs are going to replace all those internal combustion vehicles, but we're still building internal combustion vehicles, and there's a lot of other important industrial uses for platinum. So what are your thoughts on the possibility of a platinum squeeze, a spike up in the price of that, stacking platinum? It doesn't really have the monetary history that gold and silver do, but it is a precious metal, and it's in a much smaller supply than either gold or silver. So it seems like the fundamentals there favor a increase in the price from this point.
Yeah, I was once very bullish on platinum and palladium, and our company, Silver Elephant, in about 2012, made a discovery of one of the world's largest platinum and palladium mine. And I was touting platinum when platinum was $2,000 an ounce, so trading at 30% premium to gold. And that was the historical ratio, if you talk about gold to silver ratio, but there's also established ratio of platinum to gold, where platinum is at a premium to gold, and then add around 50% premium, double the premium to palladium. However, platinum and palladium are my least favored metal. I was going on a show on the record on my Twitter when palladium was 2,500. I don't like it, but I didn't short because there's got that geopolitical factor, given South Africa and Russia are the two largest platinum and palladium producers. The reason I don't like it is twofold. First, is catalytic converters. You had the Volkswagen sort of a scandal back around 2015, 2016. That's why you see a lot of the diesel cars. That's why you see the European diesels converted into gasoline. That's why you see the run up on palladium and the dump on platinum. So over the next 10 to 20 years, I see not only I see a greater share of EV, if for nothing else because the government mandate. Like if the California say you cannot buy a gasoline car, guess what? You cannot buy it, right? That's the end. There's really no discussion regarding the merits of diesel, fossil fuel, climate change, or electric vehicles, how green or how dirty. That's really not a relevant topic because the government has mandated. There's not a lot that you can do. Another point is, so first of all, you're going to see more adoption of EVs. That's going to eat into the market share of platinum and palladium. Secondly, is that I believe that world population has already reached a plateau, and that with conjunction of the advent of the AI, autopilot driving, you're going to see, you could potentially see the auto production down 50% from today. So the current auto production is at around 80 to 100 million cars per year. You're going to see that number go down to 50 million because of the decreasing in world population, but also because of the the biggest, if you think about the taxi, the biggest cost of a taxi, taking a taxi is the driver. So if you don't have the taxi driver there, there's no reason to own a car. Right now, the utilization rate of a car is less than 20%, which means that the world is using the car only 20% of the time when you own it. And that utilization rate is going to go above, which means the auto ownership is going to go down, utilization rate is going to go up, population is going to go down. All in our combined is like the auto production is going to go down by a factor of 50% or more. And then you're going to have the EV that eating into that share. And then another factor that's very for platinum is jewelry. People don't get married anymore. Silver stack. They don't get married anymore. So that's another area that is not going to it's not going to be bullish on platinum. So, but however, you do have some, maybe the advent of hydrogen cells, and they're going to be using platinum, but platinum and palladium are not my favor. And if you look at the technical perspective, both of those markets are broken down. And I will not see platinum go to 500 and see palladium go below platinum. However, you can have those temporary spikes due to the Russian sanctions, or due to South Africa power blackouts, and then mine getting flooded, or the protests, the black empowerment, all that different factors. But in terms of demand, I'm not a big bull of platinum and palladium. Rather, I think the gold and silver has much better, clear supply and demand. Both supply and demand on both sides are spelling very bullish of the future going forward. And also, the BRICS, we can talk about that. That's another major factor that sort of go hand in hand with this diversification of the dollar we've been talking about.
Yeah, absolutely. Well, that's a really interesting take on platinum. Thank you for sharing that. And yeah, that's kind of an interesting thought about car ownership going down. I guess that makes sense. 20% utilization rate. If you truly have a self-driving car, no reason for it to just not be out there driving around constantly, right? Maybe in the future,
you don't own a car anymore. I own 2 cars. I haven't driven my car in like 2 years.
Maybe in the future, you'll be able to have your car do Uber for you, right? If you do own an asset, it can just be out there driving around, making you cash flow while you're sleeping. And yeah, the government mandates for EVs, I think that while you're right, that would certainly have some downward pressure on platinum. We'd almost see an inverse effect on the price of silver, silver being a major component in these electric vehicles, more so than internal combustion vehicles. And the declining world population, I think that China was just surpassed by India as the world's most populous nation because they posted their first decline in population numbers in some decades. So yeah, it might be onto something there. Speaking of the BRICS, let's move on to that topic. And that is certainly something that has been in the news, seemingly making its way into the mainstream recently, although it's been on the stackers' radar for a while. And there's a lot going on with the BRICS. It seems like there's sort of this anti-US hegemon forming where a lot of these nations are kind of tired of having their economic policies dictated to them from the US. And even former US allies or current US allies, I guess still like Saudi Arabia, seem to be interested in joining this BRICS camp. And that seems a lot more likely now that we had China broker a peace arrangement between Iran and Saudi Arabia. I mean, China is moving into the Middle East and they seem to be exerting a tremendous amount of influence there. So this poses a big threat to dollar hegemony around the world, no doubt about that. And the petrodollar particularly seems to be coming under some threat, and from multiple angles too. We've got the Chinese petitioning the Gulf nations for yuan-denominated settlement of energy trades this past December at the Gulf China Conference that was held in Riyadh. We have the central bank of Iran and Russia working on a gold-backed stablecoin, which appears to be for the purpose of settling these international energy payments. And I think it's only a matter of time before we see Saudi Arabia pricing their oil in some non-dollar currency. I mean, whether that'll be gold, whether it'll be yuan, I don't really think it matters what the instrument will be, as long as it's something other than the US dollar. I'd like to get your take on how close do you think we are to the petrodollar system going away? Certainly seems to be on shakier ground now than at any time in its 5-decade or so history. And what effect do you think that that'll have on the dollar's purchasing power, the dollar status as the world reserve currency? And what do you think that'll do to the metals?
Like I mentioned earlier, the show, the dollar hegemony is broken down, and we're looking at once a generation event. It's not once a decade or 2 decades. It's a once a century event that's taking place. I don't really put too much emphasis in terms of the petrodollar or how you denominate the barrel of oil, because it's not so much how you price it, but what you do with the money, right? You can sell oil in dollars. You take the dollar, you can buy renminbi if that's what you fancy. So that's not so much on the petrodollar denomination, but the curious factor is, can you imagine? Okay, so can you imagine that you have Erdogan of Turkey, you have Modi of India, you have Xi Jinping of China, you have Putin of Russia, and then you have Lula of Brazil sitting on the table and say, okay, today we're all gonna accept the renminbi. Like you have these people that are almost dictatorial and prima donnas, and all this printing press are in their own backyard, and they're different culturally, language-wise. They don't see eye to eye. Just because they have a common enemy in the United States doesn't mean that they're friends. So let's not have this dream world of creating a new currency. Can you imagine how they're gonna decide? If you're gonna tie all these countries into a unified currency like the euro, that will mean that that the countries will have a ceiling on deficits, right? Because if a country runs deficit, that means that the country is printing the money. Who's gonna decide how much money, how much this new money that Russia can print versus China versus Brazil? I don't think, thinking about it, I don't think they can even agree on a time zone. They're going to have this meeting, right? Russia is going to say, I'm going to do a 9 o'clock Russian time in the morning. And then Brazil, and what language are you going to do? You have 4 different languages. I mean, it's an impossibility, in my view. And we have minds all over the world. We understand politics quite well. I just don't think they can come to ever consensus of a fiat currency that they can all agree to governing their interest rate. Now think about interest rate. If you have one common currency, Who's going to decide what the interest rate on the currency would be? Can you imagine? Like, just think that for a minute, right? I mean, can Putin come to consensus with the Modi and the Lula and Erdogan on what interest rate they should be setting? How much central banks can be printed? Or even who is allowed to print? Like the bank, the central bank is not printing press anymore because that's only M1 is only what 2% of the circulation money supply. Like, where is that digital computer supposed to sit? Let's think about that for a second. There are just so many things that are you know, like Euro is so different because all the European countries used to be one that controlled by the same Rothschild behind the scene. But you know, you're talking these fractured governments on BRICS, they're not going to come to the same consensus the page. And then all this factor combined, which only going to be eventually people are going to say, you know how it's going to go, Smart Silver Stacker? They're going to say, if you have 100 tons of gold, this is how much money you can print of this unified currency. This is what the world is going to go back to. There's going to be have to some arbitrated, unbiased measure, and that's how you can get trades done. Like the Russians is not going to accept arbitrary currency printed by China at will. It's just not going to happen. We know this. We have business. We've done business with Russians before. We've done business with China, and you know, they don't see eye to eye. You know, keep in mind, you know, during the World War II, everybody's at war, and these people study history very well. That's the first point. Second point I want to really bring up on a bit more on a higher level is, I think it's very clear for everybody to see that, you know, Biden is not the one who's calling the shots. What we're entering right now, and I'm a student of history, what we're witnessing right now is the late 90s of the coming down of the USSR. And, you know, the Gorbachev flew to DC, and you have Boris Yeltsin, the disintegration of the USSR, and where all their assets got pillaged and then be taken advantage of. Or what is 150 years ago of the Opium War, of the British coming on shore in China and Yuan, all their gold and jewelries, billions, hundreds of billions of gold and silver and artifacts and jade and treasures were rooted and shipped to London. What we're going at right now is Xi Jinping and Putin repudiating on these demands made by the same people, maybe their grandchild or maybe their daughters and sons, but they're the same people that are running the show back was 200 years ago, okay? So these guys are saying, you know, we're not going to do another Opium War. We're not going to do a disintegration of the Russia into further pieces. So they're repudiating all these demands. And that's why this causing all the war going around. This is not about democracy. These guys are two sides of the same coin. And that's why I don't see any peaceful solution. People ask me the question, say, when do you see the Ukraine war ending? That was a year ago. I said, it's not going to end until the change of regime in Russia. And now, you know, these Bloomberg, okay, and George Soros are talking about change of regime in China and how Xi Jinping is the world's greatest danger to democracy. I mean, you don't say things like that unless unless you've been given a directive. And this is not going to go away. This is going to get a lot worse. And what that means is you're going to see a broken down world that's broken down. And you're going to see a fractured world in supply chain, in demand, in everything, in currencies, in trades, in monetary systems. And when you have a situation like that, where the dollar is no longer the de facto fluid currency, gold and silver is going to resurrect itself. It's going to reinsert itself and also let's not forget, only less than 200 years ago in 1,000-year human history, that gold, you know, more than 5,000-year human history, that gold and silver has been currency. So all in all, this fiat experiment has been going on for a couple hundred years, which is long in the tooth. How it's going to play out, I don't know. I don't speak to the doom and gloom of the dollar because every other currency is worse and subordinated to the dollar. However, I don't know how the future is going to pan out. Maybe the dollar, everything's going to be converted into a central bank digital currency and whatnot. I have no idea. Okay, you have the carbon credits, and it's all this restrictions going on, health mandate and carbon mandate and all the different mandates. I don't know, but you got to own gold and silver. This is where this is where you achieve your financial and personal liberty and freedom. This is not some hearsay or some sort of academic a philosophical discussion. This is the iron hit the rubber hit the road. These mandates are coming, and it's unavoidable. It's coming. You don't know when, but the writing's on the wall. Don't wait until it's too late. Buy gold and silver physicals.
Wow, heavy stuff there. Yeah, absolutely.
Yes.
So with the last thing you said, there's certainly gold and silver, do offer a safe haven in this environment. I want to comment on a few things you just brought up. So the first, the BRICS currency. We've heard that they're going to talk about the BRICS currency in August. You seem to be pretty skeptical about that. Certainly, even in the EU, we have seen some disagreements there with, concerns about some of the stronger European economies sort of buoying up the weaker ones. And certainly the European governments are a lot less disparate than the BRICS countries. However, I will say that, we have seen Russia utilize the yuan quite a bit in its economy following the invasion of Ukraine and the subsequent sanctions and things like that. So I don't know how willing they'll be to utilize the yuan, but we have seen, I know in their national wealth fund, they've basically made that exclusively gold and Chinese yuan. And it does seem like the yuan, of all the currencies of the BRICS nations, perhaps would be the candidate for the basis of some kind of a BRICS currency. But, time will tell. As the yuan Mhm.
But there's very little alternatives out there. But rest assured that these, I'm sure the Russians don't want keep in mind the Russians, they don't want to have the economy and their financial system to be controlled by the fingers and computers of a few in communist China. Remember also during World War II, it's not only so long ago, less than 80 years ago, that Russia invaded China and took up thousands of square miles of land in Manchuria. And now there's a lot of talk about China wanting that territory back. So I think it would be quite easy blackmail of holding, yuan is abstract concept, just like the dollar. The Chinese central bank can erase that dollar renminbi holding of Russia. It's just as simple as pressing a delete button on their computer. So I'm sure that Putin didn't get to where he is without knowing that. And I just don't see that. I don't see longevity of this arrangement right now. It's only arrangement convenience, but it's not going to last long. And I would not be surprised as soon as that Putin gets hold of this renminbi, immediately converted to gold and silver in some private account in Switzerland.
That's a great point. Yeah, Russia and China do share a gigantic border, and they do have a history of conflict. So that makes a lot of sense. And yeah, the Russians certainly have shown a propensity for favoring hard assets, and rightfully so. Following these sanctions, they've demonstrated how wise it is to hold some of your national assets in hard assets that can't be so easily sanctioned and cut off, like from the SWIFT system, the US dollar. And I agree with you. I do think that what we're seeing, this shift to a multipolar world, is a bit of a repudiation of colonialism. I mean, even more recently than the Opium Wars and that sort of thing, we had the Iranian Prime Minister, Mohammad Mossadegh, right? He was overthrown by British intelligence and the CIA, and that's not a conspiracy theory. You can read about that in the history books. So yeah, even the petrodollar arrangement is sort of a lingering vestige of that. So we're still putting our fingers all over the place. And if you look at a map of US military bases, we're encircling China. We've got a lot of aircraft carriers over there right now, and I hope that you're wrong, that, the conflict isn't going to deepen, but I think that, it's best to prepare for the worst, even if you're hoping for the best.
Hope the best.
Yeah,
exactly.
Absolutely. Absolutely. So you are the CEO and chairman of Silver Elephant Mining Corporation. I would like to get your take on, what kind of a role you view the miners, the precious metals miners, holding for precious metals investors. Myself, I kind of view it as like a barbell approach, like Nassim Taleb describes in, I think, Anti-Fragile, where he says, take the majority of a portfolio, put it into very safe assets. I view that as being gold and silver, physical metal in the precious metal space. But then you can take a smaller allocation and put it into riskier assets so that at the same time that you're protecting your investment and your wealth, you are giving yourself some exposure to more significant upside. And so that's kind of my approach, but I'd be interested to get your take since you have a lot of experience in the mining space. What do you think about the gold and silver miners as an investment versus the physical metal themselves?
It is the same as money versus S&P 500. So depending on your risk tolerance, your time horizon, if you depending on risk tolerance and time horizon, if you're 80 years old, you cannot stomach a 20% down on your portfolio because you rely on a paycheck to survive, and you already planned out your life on how much your is going to spend, how much your portfolio is supposed to generate, and you've also planned out. Then you want to keep your money in cash, and in terms of cash, that's where the gold and silver bucket go. That's where gold and silver went to that bucket. In terms of the mining company, that is an equity. So that is an investment. It is enterprise. It is a business that generate earnings and that will maybe pay dividend or increase the value of the company. So the mining companies are in the business of mining gold and silver, and they mine say, for example, silver for $10 an ounce and selling in the market for $25 an ounce, so they make their margin of $15 an ounce. So then if they mine 5 million ounces a year, then they make $75 million a year on a conservative PE ratio, then that will be something about $1 billion company. So this is how mining companies work. They go by earning, their valuation go by earning. Their valuation also go by how many ounces in the ground. So for some of your more sophisticated stock traders, mining companies also some of them value based on also sort of being drawn parallel to stock options, call options. So in that, I think overall, I just want to go back to your question. First of all, gold and silver is money. Okay, so that's the bucket. But then for guys that are in the 30s, 40s, or 20s, or 50s that has some discretionary capital for more sort of higher risk tolerance for higher reward than just looking at gold and silver, besides gold and silver, sort of you want to have a bit more leverage on gold and silver prices, then you're looking at equities investment. You could be looking at mining equities as an investment. I think, like for example, if you look at, say, for example, if silver went from $25 to $30, and then the price goes up 20%. But if you look at silver miners, if somebody mined 10 million ounces of silver per year, if silver go to $5, that's another $50 million of profit. So if they were just breaking even at $25 silver, and then all of a sudden silver go to 30, then actually all of a sudden they went from cash flow neutral to $50 million in cash flow. So that could have a multiple effect on the share price versus the nominal increase in the silver price, if that makes any sense.
It does, yeah. So you're almost getting a leverage to the price of the precious metals by owning a mining company. I mean, it makes sense. Once they are breaking even, any increases in the spot price, it's all pretty much gravy at that point. And you could see exponential
exactly,
gains.
to the bottom line. Yep.
Tell us about Silver Elephant Mining Corporation. What do you focus on? What are you primarily producing? Where are you located?
Right. Smart Silver Stacker, we're in the business silver exploration. So right now, the mine is not in production. Our mine is in Bolivia. It had over $40 million investment into the mine. Over 100,000 meters of drilling had gone into ground. So you're looking at 100,000, you look at 100 kilometers of drilling that's digging into the ground, often exceeding 100 floor beneath the surface. There's over 100 million ounces of silver in the ground that's been independently verified. So the whole idea is, okay, now you have a company of 100 million ounces of silver in the ground. It's not making money right now. It's not mining, nor do we want to mine at these prices because I don't want to exchange silver for fiat at these prices. And then in terms of valuation, basically right now you're paying 20 cents at a company valuation of 20 million. Not only 2 years ago, we're trading almost $100 million market cap, but right now the miners are unloved because there's still quite a bit of fear on the street about all this uncertainties. There's not a lot of greed on the street. So right now our company is being the lowest it is since the inception, actually. that the valuation or the market's assigning 20 cents an ounce of silver in the ground. So with the 100 million ounces of silver in the ground, the company is trading at $20 million market valuation. Now, of course, there's risk of getting the project into production. There is, tens of millions of dollars, potentially $100 million capital expenditure required. The cost of extraction could differ with inflation and everything. So I think in terms of valuing the silver company, is more art than science. I just want to say that in the good days, you could assign easily $5 an ounce for silver, an ounce of silver in the ground. And on the bad days, such as we are right now, we're being valued at 20 cents an ounce of silver in the ground. So it really is just as low as it could go. And there's also a lot of indicators in terms of silver mining index versus the price of silver. And right now, it's also at a very extreme bottom. So even though you're seeing gold that's broken out its all-time high, silver prices yet to break out, and silver miners are even laggard behind that.
Yeah, the mining companies do seem to not be getting much love at the moment. I mean, we've seen this big move up in the price of gold and silver, and yet the mining companies still behaving as if, gold is at $1,800, silver still at 17. Yeah. So you know what they say, you got to buy when the blood is in the street, right?
There's another couple of reasons, because equities, eventually mining companies are still in equities. And as you know, equity had a big correction last year. It went straight down, right? S&P and NASDAQ were down 20%. And now the world's reflating, and the equity NASDAQ and Dow and S&P are above 200-day moving average. So I think the worst is over for this equity market. I am not in the camp of Peter Schiff and Robert Kiyosaki. I think the market is going to reflate. And empirical evidence also said that in the period of inflation and hyperinflation, like Brazil and Russia, the equity market actually outperformed, and actually holding up value well because they're quasi-tangible assets. And then the other thing is also this carnage of cryptocurrencies. That also, the mining companies share a bit of a common audience with the cryptos, and cryptos also had a bit of carnage last year, and crypto now has also recovered somewhat, which spell like, as I said, in terms of risk reward, mining companies is interesting place for investors to look at if they can stomach a bit of a risk tolerance and have a bit of a time horizon in the sort of a 1 to 3 year range, and not to be sort of on a daily basis looking at the tape.
I think that goes for paper assets, equities, and also for the physical metal. I think that there's a lot of impatience out there these days. Following the era of the meme stocks and crypto's meteoric rise, everybody expects to buy silver and then to, become rich overnight. And I've been stacking for more than a decade now and just kind of patiently biding my time. I know a lot of seasoned stackers are in that same camp. So if you're new to stacking and you're watching this, it's not a get rich quick kind of thing. It's buying assets that are clearly undervalued when you look at the fundamental picture around the world. And to me, that's what I want to do. I want to buy things when they're cheap. I don't like buying things when they're expensive. I want to sell them when they're expensive. That's just kind of 101 for investing, in my opinion. I do kind of want to get your price forecasts for both metals, for gold and silver, before we wrap this up. I know that can be hard to put a number on, but if you had to say, where are we going with gold and silver, any timetable that you're comfortable with, but I would just like to get your forecast for where the metals are headed from here.
Right. We talk about gold and silver being fundamentally sound, and I also mentioned that, but now it's even better time. There's some people that missed the boat. Silver was 1650, not only 6 months ago. And that was 1650 was exactly what it was about 10 years ago. So that was once in a lifetime opportunity to buy, but now it's even better. I think that because technically gold is also breaking out. In terms of my target, back in October, I was on a couple of shows. You can Google me, John Lee, silver or silver elephant, and I cut on a couple of shows in Palisade and Medical 64. And I said gold, it would be 2000 and silver would break out 28. And that was back then, the gold was 1700 and silver was about 1750. My target for gold has reached, and silver is, like I said, not far behind. My target for gold this year is, I would say, on a conservative 2200, on the sort of reasonable level, be 2400. Nobody really knows, because once gold takes out 2400, you have no idea how high it's going to go. But I do think that once goes past 22,000, which it will, if it stays over 2,000 for the next 2 weeks. If the beginning of May, we're still looking at $2,000 gold, it's going to make a run for the next 6 to 9 months. It could go to 2,200 to 2,400, depending on a lot of factors: interest rate, the dollar, geopolitics, the BRICS, et cetera, et cetera. For silver, so my target for gold is, I would say 2,400, but at minimum 2,200. For silver, I see a definitive breakout of $28. So it's a bit slower, sort of didn't do as fast as gold. But then if you look at the gold to silver ratio of 30, or say, let's just say to be conservative, at 40. So at a $24 gold and at a 40 gold to silver ratio, you're looking at silver at $60. That was probably a reasonable target. However, technically speaking, after silver takes out $28, it's going to take a brief stop at 35. Then you really have no idea. Keep in mind, silver market annual supply is only 1 billion ounce. So at a $30 silver is $30 billion. That's a drop in the bucket. In 2011, when silver went from $15 to $50 in a few months, it was a rumor that Eric Sprott and some Asian investors went to the market and demanded a 50 million ounces of physical. So if a 50 million ounce physical can drive silver from $15 to $50, and 50 million ounces is only about 100 million US dollars. It's a pin drop in the bucket. That you would not be surprised if some guys like a Hunt brother in the 80s or another Eric Sprott make another run at silver with, say, $500 million cash in a stealth more than quarter of the market. He can easily see silver racking up a $30, $40, $10, $20, $30 gain in a day in the Comex. And I would not be surprised at all to see a $100 breakout, but I would say easily taking off $35 and 50 to 60 seems to be a fairly sort of rational target if you're looking at $2,400 gold based on the 40 gold to silver ratio.
I think that that's a very good conservative estimate. And like you say, I mean, the silver market is so small, 1 billion ounces a year. It's such a tiny market cap that it wouldn't take much in the actual physical market. I mean, the paper market is much larger than that, but physical metal wouldn't take much. You know, if we see Elon Musk start tweeting about silver, I mean, the price could absolutely explode at any given moment.
And you know what? The world is going to go on as they are. You know, it's not going to be some crazy thing's going to go, world's going to go berserk just because silver go to 100. I think world's going to go on just like they are. I think majority of the people, even at $100 silver, is still going to be asleep. Right now, maybe 1% of the investment community know about silver. 0.001% of the money is gone to the silver. So even at a silver at $100, so you're looking at instead of 0.1%, instead of 0.1% people know about silver, now you have 0.5% of the people know about silver. It's still very early. It's very early going.
Yeah, a lot of room to move up in these undervalued, unloved assets. Well, John, it's been a really good conversation. We'll have to do it again sometime. I'll have to have you on. It's been a real pleasure chatting with you. Before you go, tell everybody where they can find you. Tell everybody where they can find Silver Elephant Mining Corporation. Anybody who wants to hear more of John Lee's analysis, where should they look?
Yeah, I used to be very active in Twitter, but when silver was 1650 about 6 months ago, I said, buy it and just stash it away. I'm gonna lay quiet for the next few months, which is what I did. So, but look me up, John Lee, Silver Elephant Twitter. Silver Elephant's website is silverelef.com, ELEF. The company is traded on the Toronto Stock Exchange main board. The symbol is ELEF. Over the counter, the symbol is SILEF. We were one of the highest trading volume in 2021. And right now the stock is unloved, and that's the time really has a good risk reward ratio. On Twitter, I call it like it is. I live in 3 different continents. I travel 40 countries, and I spend half my time grew up in Asia, and the other half was educated in the United States and in Canada. So I call the market like it is, and you know, I look forward to making more friends and then enjoy the ride together. This year is going to be one of the most interesting market for silver. This is once a generational opportunity. You're going to see silver, I would say, should be exceeding triple digit the next little while, just like silver did in 2004, went from 4 to 15. That is the 3x. So right now you can at $25 3x would be about 75, which again gel quite well with that $60 to $100 target. People are going to call us crazy, Silver Stacker, when we revisit. few months from now. I'm very confident. I'm very confident with my call for 2023.
It'll be very interesting to look back on these conversations, I think, in the next 6 months to a year. Absolutely. Well, thank you very much, John. It was an absolute pleasure. Take care. And to everybody watching, stay safe and happy stacking. And I'll catch you next time. Smart Silver Stacker out.